welcome to Wednesday, October 9th. And the first chart we're looking at here is the 30-year Treasury bond futures contract. And I've been looking at this for quite a while here. Look at this. We've got 11 days now where the market is in a real tight range. I haven't seen a range like this in the bonds in quite a while off of a daily chart. So this is quite a range here. So again, a close above these highs right in here would really get me into the mode of looking to buy this market on a pullback, because I believe if we're able to close above these two highs, the 133.29 and 30 seconds, if we're able to close above 133.29 30 seconds, I feel that the market could run up close to this 200, almost 3 basis points higher. 2.5, 3 basis points higher. But again, we need to close above. Here we go. The market just opened, so we need to close above the 133.29. Now, of course, the bonds open up earlier in the morning, right? But the general market just opened up, and so the bonds. This is what I'm looking for. So again, if it closes above 133.29 30 seconds, I would be looking to be a buyer on a minor pullback after that close. But to the downside, if the market's able to take out, and again, I outlined this for you last week, 132 and 20 seconds, 132 and 22 30 seconds, I would be willing to sell that market short automatically as it penetrates down through that low intraday. Okay? So again, still sitting and waiting for the right setup here in the bonds. Let's take a look at the British pound US dollar forex currency pair. Now this has been on my radar for a while as well. The market's had a nice move up. Market put in this high. We've been patiently waiting for the market to pull back to hit a level of support. And as you can see, the market really sold off here in the last few hours. And we are obviously clearly right in between this mid to lower band. This is a first level of support. We should get some type of support in here, but because of the range of this bar, right, from the high to the low of this bar, it's the biggest bar that we've seen in quite a while, until, since this bar over here that I'm check marking. All right, so I'm just gonna hold back and wait for this to see if we can settle down a little bit here. So I'm not going to do anything just yet. What I want to do is I want to measure from this swing low up to that high. Look at that. We've got 38.2 of this swing from this low to this high right in here. And that level is 1.5940. All right. So we're near the low of this bar. So I'm gonna keep this on my radar. It's getting into an area where I'd get excited to take a trade to the long side. Again, I'm gonna see if I can get an inside or an outside here in the next day or so. So I just want to kind of see how far this can drop before looking to be a buyer here. All right. Now let's take a look at a trade that I did put on yesterday in Facebook. FB, the stock Facebook. FB. All right. Okay. As you all know, this market's been up big time. And a majority of this run up, the market has actually been trading above the upper band, which denotes extreme momentum in the stock. Yesterday, the market sold off dramatically. So what I decided to do near the end of the day was, I sold an October 11th put. All right. Sold an October 11th put, which expires this Friday. So, I got Wednesday, Thursday, and Friday, and then it expires. I'll collect that premium. I didn't collect a whole lot in premium, but I collected 27.5 cents. Okay, 27.5 cents point, right? 27.5 cents. So that's $27.5 per contract. So if you did 10, $275. The only downside when selling puts, if you can consider downside, I don't consider downside at all, is being put the stock. So the price, right, is $26. So I sold, okay, sold October 11th put it for 27.5 cents for, no, I'm pulling up my account here. Hold on. No, I'm wrong. Okay, no, totally wrong. Okay, this is it. Scratch that. All right. I just pulled up my account. I was looking at something else, Facebook. Okay. Here we go. Okay, it's the October 11th expiration. Sold it for 42 cents to own it at $46. So $42 per one put you sell, right? So if you sold 10 of them, $420. Expires on this Friday, and I would love to own the stock at $46. Okay, so again, you know, selling puts is a great thing if you're willing to own the stock and to trade that stock. So look, I've been waiting for a pullback since we got this gap for a while. Missed this pullback, wasn't able to quite pull back where I felt comfortable buying it. Here, another missed opportunity. Didn't quite pull back far enough between the mid to the lower band. This one, yes, mid to the lower for sure, but since yesterday got its head handed to it, I'd be willing to buy it a bit lower. And again, $46. I'm willing to own it at $46. I collected 42 cents in premium. And again, it's a 3-day play, right? It expires on Friday. So we'll see if I collected the premium already. The question now is, do I get put the stock on Friday? So that is my most current play right here on Facebook. And again, let me reiterate it. It's an October 11th put at 42 cents to own it at $46 if I put the stock. So the stock's got to, you know, close at or below, obviously below 46 for me to actually put 46. So if I put the stock at 46, I would actually own it at what, 46 minus 42, which would be 58, right? My price on that would be 45.58. That's where I would actually own the stock at, because I've already collected the premium of 42 cents. So again, in terms of position sizing and money management, that's really up to you. You know, it's got to make sense according to your account balance. So hope that helps. Have a profitable day, and I'll be back with you tomorrow. Bye for now.